Hello and welcome back to Dukascopy TV. I'm Natalie MacDonald. Back in the studio with us today is Jean-François Owczarczak of Management Joint Trust to discuss some of your favourite pairs. Jean-François, thank you very much for coming in today.
Thank you for having me, Natalie.
And after last week's eventful data week, we're looking back at the dollar pairs today, yes?
Yes, exactly. And well, we're back in our Dukascopy directory on our Fingraphs website. And we're going to focus on the dollar pairs first. And let's look at the mosaic in an hourly frequency. Okay, here we go. So what is interesting here is that you see a lot of red. And you have three trends which are still in green. The euro US dollar, the pound against the cable, and the Japanese yen, or the dollar Japanese yen. And we're going to focus on these three first. Basically, these trends have been in the making for quite some time. And the question is, are they getting to levels where we could expect a reversal?
So let's select the euro US dollar firstly then.
Okay.
The euro US dollar last week ended on a gain following better than expected US jobs data. Can we expect this to continue into this new week's trading? Okay, well, let's put it into perspective. I mean, our long-term weekly chart is still heading down. So, I mean, the envelopes are fairly flat, but it's been a quite long-term downtrend, and so it's still in place. Targets, as said last week, are still aggressively down. We would be careful in drawing the full conclusions of these aggressive targets, because the 120 still needs to be broken before we could consider them. So the 120 is really a very important mark here. Now, the trend is still negative on the weeklies. On the dailies, the top, which was done at the end of January, early February, is still correcting down or consolidating down. And we are basically still in a downtrend here. Just want to focus a bit on this chart. While we're still in a bear, targets are still heading down, and we've managed to create a counter-trend move here. What is interesting is that the counter-trend move is slowly getting towards a point where we could see new amount of market stress, meaning that the smaller envelope could soon touch the larger envelope. That on descending envelopes, which would mean a resummance of the trend down. We could also see that the risk index here is back in the red. So we're in a risky situation again, where this trend could be reinstated. Now let's have a look at the hourlies. Well, the hourlies reflects this counter trend move. And what we could say here is that over the last month and a half, we've pretty much taken out all the potential up that the euro could have in this move. We're in the target zone here at the moment. We've just had a quite nice stress, meaning the smaller envelope touching the larger envelope, and the risk oscillator was in the red for a second time and moving lower. So in this respect, if we take our three charts together, well, we're still in the bear on the weekly, we're still in the bear on the daily, and we're in a point of stress again. And the hourly could theoretically have finished its correction up. Now let's go to a shorter term view, i.e. the trader's view. Now the trader's view has started this move down. It has passed through our corrective targets, which were about the 131 level. What was very interesting last week is that we had a breakout level about at 131.10, and once we touched it, it really shooted off, and we basically fulfilled our potential over the 60-minute impulsive up movement. Now, all this configuration also in standard technical analysis is quite interesting. It is an island reversal, and so that is really a point where the market could have turned. And so in an initial step, we believe that there's probably a possibility to go back below the 130s over this week in this initial downtrend. The 15-minute is a bit in the middle of the range. The 4-minute has done an initial move and is correcting up. So if we put that in the perspective of what we saw on the investor's view, well, still down on the weekly, still down on the daily, and pretty much at the point where we could have finished the correction up over the last month and a half on the hourly. Now if you focus on the pound, well, a similar situation here with on the hourly, this move over the last month or so having taken out much of its potential up. Very well labeled here as a correction up, and we're pretty much here
on the dailies in the zone, which would be meant to be the resistance zones for a correction up. So it's a good point to envisage at least a take profit if you're in this move, or a resumance of the trend down. And corroborating this, the weekly is still in a bear trend. So watch out here. We're closely getting to a level where on a short-term, medium-term basis, the pound is pretty well priced. Now if we quickly go to the Japanese yen, well, Japanese yen, well, it's still good over the long term. Again, we're seeing an extension from Friday's gains. Well, I mean, this is the weekly, so it's quite a long-term chart, but we're still in an uptrend and it's meant to continue. However, over the short term, we've reached quite sticky, well, over the medium term, because this is a daily, we've reached a quite a sticky area. I mean, our impulsive 2 targets have been reached, the stress on the envelopes, and our risk index is in the red. So here too, we could expect the beginning of a counter move. And for the time being on the hourly, as we see stress again, slowly moving up into the red, there's probably a bit more potential here over the next few days, but we should this week probably see a top and the beginning of a correction down. Now, just wanted to go on our last pair, which we've had in focus over the last few weeks, is dollar Swiss. And so dollar Swiss, we're still in a quite weak move up since 2011. The impulsive targets are still quite interesting, but it's just having a hard time making accelerating in this move. Now, what would really help dollar Swiss here is to make it above our corrective targets, meaning to create an impulsive move up. That is moving above 96 or 95.90 as we see here. Now, for the time being, on the hourly, it's having a hard time, and it would really need to reinitiate an uptrend before we can consider that. Now let's focus to the trader's view to see if this could probably happen this week. Now if we look here, well, we're in a correction up move, it's done. We're hitting against resistance. Also here, making it above 94, 93, 93 would help accelerate this move. So basically, we would wait for the Swiss franc to really accelerate a bit to confirm what we see on the longer term. Now, the other usual suspect at the moment is gold. This is a battle which really does seem to be continuing. This week, are we seeing a win for the bulls or the bears? Well, basically, a huge sell-off 2 weeks ago. And our targets had been met on the downside. But this strong move opened the door to much lower targets on the weekly. So is the daily going to be able to rebound significantly from the bottoms we had here? Is the daily going to be able to rebound? Or should we still be watching out for these quite dangerous targets on the weekly? Let's focus on both. Well, we've went through the corrective targets and are pointing down to risk, which could lead, and that's about a year out time horizon between 1,000 and 1,200. So basically that's your risk, and that's what you have to be careful about. On the dailies, well, you were quite oversold here on the risk index. You did have stress on the envelopes, but it's still a downtrend. And although the targets were reached, there's still quite plenty of time to finish off this downtrend. So I wouldn't be surprised if we see a retest of these lower levels, and in light of the quite dangerous targets on the weekly, maybe go lower. But for the time being, it's consolidating up quite nicely, actually. Was pretty much in the middle of the range, and the targets could bring us back to where it actually broke. It's a bit not as strong as it should be, but for the time being, it's moving slowly up, and we will need to focus on a trader's view to see if this is sustainable. Trader's view, well, for now, it is sustainable, it's moving up, and there's no real sign of danger yet. In first instance, you could probably watch out if you get into a corrective down mode here, and especially, and that's a good rule of thumb, if you make it below the lower end of a larger envelope, around 1440, then we would start to worry that this correction up is over on gold. And that's it for today. Jean-François, thank you very much. Look forward to hearing from you next week. Thank you. That's all we've got time for right now. However, stay tuned. We've got more exclusive interviews for you. Goodbye for now.